And now for a closer look at what's playing itself out in that market scene, I'm joined by Louis Storm from Vega Capital. Louis, a pleasure. Good afternoon.
Thanks, Andy.
Right, a bit of a choppy one in the local bourse. And I'd even say in Europe, we do see green screens with the CAC and DAX, but the FTSE down in the red. Let's talk about this Tuesday and what we're trying to digest.
So basically, it's been a very volatile period over the past couple of weeks. Firstly, we thought the US might be entering a recession, and then inflation was better than expected. So now some analysts are pricing in more than 50 basis points worth of interest rate cuts, which then obviously changed the sentiment a little bit, because that would be seen as support to the economy as well as to companies. So I think, it's difficult, as well as geopolitical tensions is also decreasing. So it's difficult for investors at the moment to kind of find a balance between being too positive or too negative. I think it's difficult to read the market at the moment.
Also very interesting here is the strength the rand is enjoying. We'll take it. I think certainly welcome by us South Africans. But I will be honest, Lou, it's a little bit unnerving for me, because it means that, markets are optimistic about South Africa. And while optimism is good, it also means that at any sight of disappointment and with the volatility going around, we could see a huge inflection in that rand.
That's very true, but it's for a couple of reasons. Firstly, as I mentioned, the inflation in the US was better than expected. So now some analysts are expecting Fed cuts by around 50 basis points, which obviously puts pressure on the dollar, and in turn the rand appreciates then against the dollar, strengthens against the dollar. So that's the one factor. The other one is the geopolitical risk. Because that decreased a lot, there's a risk on trade going on, and that's why we see some rand strength as well. Risk to this is if the Fed meeting minutes are released and they are not as dovey as we thought, then obviously that could put a lot of pressure on the rand, or not a lot, but it could go back to where it was, around 1820 or 1830.
We also saw rallying in Asian markets there, but China not quite, meeting the rest of that market where it's going. I think there's a consistent disappointment with China. We are seeing the government, we've been speaking about it for, I think, over a year, no real stimulus coming out of there. And I think every single opportunity for stimulus that's not taken up, markets are even more disappointed.
Very true. So, China kept lending rates constant again, and I think that was expected and priced in. China has been struggling with a weak economy, and it's mostly due to the government. They're sitting with great companies and had a great economy, but the regulations are just slowly killing the revenues and the margins of those companies.
Just speaking about China, though, Louis, if we just think of the temperament of that government, we know that when they become intentional, when they decide to make a move, they often make that move with, all of the force that it requires. Is it possible now that, they view their economy differently to what we do, that, we're saying you're not taking up the opportunity to do what you can for the wonderful businesses that operate within China, and they may be thinking, actually, we're at a different point in our cycle, and we'd prefer to let the scenario play itself out?
Well, that's definitely true. I think I'm not sure what their strategy is, but I mean, it's definitely not to stimulate the economy at the moment. So they are trying to create businesses for the greater good of the country, or that's the strategy that they're working towards. That's what they say. So I think that's what they'll try and do, is create value for the country. And maybe we'll see why they're doing or implementing the regulations that they were implementing in the next couple of years.
And then let's touch on our local markets here as well. Record highs, Louis. Do you think there's still more for SA Inc. here? We could see even better records, or is it impossible for us to see this rallying, this continue for much longer?
Because JSE underperformed meaningfully for the past 10 years. So, I mean, our companies are trading at depressed valuations, very, very cheap. So, well, starting with the government of national unity, that was the first step in the right direction, creating some positive sentiment and getting some of the offshore funds back into South Africa. I think that obviously creates some momentum, and I still think there's a lot of value in South Africa if we do see some of the offshore money flowing into South Africa. We could see a lot more upside to our stocks. Obviously, there is risk as well. If geopolitical tension does increase again, then we could see money flowing out towards safe haven assets like gold or US bonds. But at the moment, we are we still see upside to the JSE stocks.
Let's talk on Aveng now. They came up with some numbers today. I see that share price up 5% today. So welcomed by markets. They're split into two businesses. I'm keen to get your thoughts on this move. It does sound like, Aveng is just not giving up yet. And very interesting to hear of even a possible new listing on the JSE there. What are your thoughts on this one? And is this the best way to get value for shareholders going again?
I think, yeah, they've had a tough time in the last couple of years. I think if anything is perceived as being a bit more positive. So I think it's still a very long way to go. And it's still, the share price is still down by a lot. So we'll still keep an eye on what the management does there. But I think it's still a long way to go before the share price will meaningfully go up again.
And let's touch on Sasol as well, also out of the set of numbers. I think they've already guided us to these losses, Louis. So what do we make of their performance today?
Yeah, it's obviously expected. Chemical prices is low, so it's difficult for a company to make profits, especially for a mineral company or chemical company to make profits if the prices are low. But they did have some issues, other issues as well. Sasol also cut the dividends because of the debt being too high. That's also a major concern for investors. At the moment, we will not. We are a bit cautious on Sasol.
Let's get into some stock picks now, Louis. Let's start off by looking at counters that have found favor with industry peers.
Clientele on the JSE. Now, Clientele is sitting at a double-digit dividend yield. It's the results are due in a few days or few weeks, and the balance sheet should already have access to a much better bond market. The share prices of the other insurers on our market have already had quite a run. I think Clientele is lagging them at the moment, and just cheaper one. Obviously not the best quality one. Sorry, that's my humble opinion. They're better run insurers out there. But I do see them trading at a better valuation than they are at the moment, and while you wait to get what dividend yield.
Well, in a similar kind of theme, I'm going with Combined Motor Holdings. So it's an SA-focused company that should benefit from the better rand environment, the better. They've got some great brands. They've got Suzuki, they've got Haval, they've got Chery. You've seen these things all over the road. They're capturing market share at a rapid clip, and they will benefit as the rand strengthens. It's a highly cash generative business. It's trading on 6 times earnings. It's got a dividend yield of around 11%, and it's a well-run, good management team.
I'm going international despite the fact that there's so much South African news, and I'm picking the 10x Global Dividend Aristocrat ETF. Its ticker is GLODIV. The reason I'm picking that is, first of all, it does appear as if offshore there is not really going to be a slide into recession. You've got a stronger rand now, so you can access offshore relatively cheaply. And also, we've seen a shift from investment from investing into tech players, which is a really crowded trade, into more of what I call the plotters. So I think with interest rates coming down, a dividend aristocrat or dividend shares are going to become also increasingly attractive to investors. So there might be another kicker from there. And you're not going to have massive growth in a lot of sectors anymore anyway. So what I love about this ETF is that 57% of it is in the US. So it's actually lower than the MSCI World. And there is some Asia exposure as well, which I think is great for that.
All right, Louis, let's get your thoughts on some of those counters. We've got CMH, a clientele, and the 10X, a global dividend aristocrats ETF.
Yeah, so most of our JSE companies, including clientele, CMH, as I mentioned, trading at cheap valuations. CMH specifically, I think, will benefit from the decrease in interest rates and as he mentioned, as well, stronger rand. So I think that's a good pick. And then the global dividend ETF, I think it's a good way for any investor to get exposure to the broader US, to the global market. We can, with a small portfolio, you can buy into this ETF, and it's a good way to get that exposure. So it's a good pick.
And with that said, which counter are you loving today?
So my pick is BAE Systems. It's part of the aerospace and defense industry. So as it's escalating against global security concerns, intensified by the Ukraine conflict, this drives the growth in the defense market. We think that the market will still grow by a lot, as there was a lot of underinvestment in defense by the European countries, especially. Usually these contracts are quite long and inflation adjusted as well, so it's a good hedge against weakening economic growth in the future. We also saw the BAE Systems report earnings a couple of days ago, and they had a record high order backlog of £74 billion. So, I mean, you can see there's some interest, and countries are starting to buy into this narrative again.
Louis, a pleasure having you with us today. Thank you so much for taking us through the markets. That was your midday markets update with Vega Capital's Louis Storm.